So how to become successful in raising funds?
There's basically a very small number of companies that seem to be legitimate.
There are like hundreds of thousands of traders out there. So what should I do? Because capital is limited.
I think the main things people should think about is, so it's not just like, okay, I'm opening an account, buy.
This retail brokerage industry, where is it actually headed? You have all the insights. Hi everybody, welcome to the podcast show by the Trading Pit, where we delve into the intricacies of trading and financial markets with the help of experts. In today's episode, we aim to shed light on the retail trading industry. So a bit the brokerage industry, maybe we touch also a bit prop industry. And we shed light on this through the eyes of someone who is actually a very special person. I've known him quite a while, who's been both behind the scenes and at the forefront of market analysis and the industry. So let me introduce you to David Kimberly, the founder of TradeInformer, which is a premier news website that offers in-depth research and analysis on the retail trading industry, with a rich background in asset management and having worked closely with leading financial institutions such as BlackRock, JP Morgan, and Fidelity. Wow, David. David brings a wealth of knowledge and experience to this discussion on retail trading. Did I cover do you want to add something to this intro?
No, I mean, I think you did quite a good job. So maybe I'll give some background on myself. I mean, so like you said, I run TradeInformer, which is it's more of a B2B news website covering the retail trading industry, which obviously includes props now and also primarily retail brokers. But that's sort of a moonlighting job that I do. In my full-time job, I work for, I suppose, what you could call a specialist asset management company. And primarily what we do is market different funds. So half the team works with closed-ended funds and the other team works with UCITS, which is essentially a way of a sort of regulatory umbrella that exists in Europe. And it's a way to access hedge fund strategies in a more liquid form. And then we also have a fund manager in-house who runs a emerging market fund. So that's sort of me. And happy to answer any questions.
Everybody who is part of the financial industry that has some kind of story behind entering that space, because some people go to the financial industry, some people go fishing industry, like people go to different industries. So what is your story? Like, why this specific industry? So what's the story?
Yeah, so it's a bit of a roundabout. I've ended up in quite a roundabout way in the position I'm in. So, so I actually studied history at university, which I think, the UK is actually quite unusual in being more accepting, I think, of degrees that are not so technical. So if you look at, say, the biggest fund manager in the UK at the moment, or of the last, let's say, 15 years, is Terry Smith. You may have heard of him. So Terry Smith actually did history, right? So I think it's sometimes when I say that, people are surprised that I did this degree and have ended up in that position. But I think it's perhaps not as unusual as people would expect. But I basically finished my degree and I ended up working for a media company, which owns a few brands. So one is FX Week and the other was Risk.net. So the one I worked for was called Risk.net, and I did some things on FX Week as well. And that was actually a very good job because it was sort of project managing different parts of that business. And you had to work across research, sales, marketing, all that kind of thing. But it was quite boring because risk management in the banking industry is not particularly exciting. And after about a year that I left and I ended up moving abroad and for various reasons. And and completely out of the blue, got a job offer from Finance Magnates, which is a sort of another industry publication, and ended up working there. And that sort of similar to TradeInformer really covers sort of retail trading industry. It was a pioneer, I would say, actually, in doing so. And then after that, I ended up moving to Free Trade, which is London-based. So I'm based in London now, stockbroker. And I worked there for about just a bit over 2 years, which was a really fun experience. And that was mainly doing some press things, but also a lot of analysis, research type role. And then I moved into the company I'm at now. So it's been here for about 3 years, or a bit less than 3 years. And that's, again, more it's sort of research come marketing. So, we produce a lot of research, but the goal of that research is to market the funds that we work with. And that's been really interesting because it was a sort of totally new thing for me. I mean, you're working with all the big asset management companies. So like you sort of said at the beginning, working with BlackRock and JP Morgan and Fidelity, Invesco, all those guys, as well as some more specialist, smaller players. And so that's where I'm at now. And the reason I started TradeInformer really was a bit over 2 years ago now, which is just, I find it a very retail trading, a very interesting industry. And it's so big. And
I have a question, but like, why you specifically, of course, Finance Magnates, it's more like B2B, but of course, their clients are to a large extent retail focused brokers. So where did you have like this idea that just focus more on this retail trading and financial industry in general, with specifically with TradeInformer?
So I mean, I think we probably have a somewhat similar audience, but my view is that there was not, there's a huge industry, and actually there was a lot of very good coverage of day-to-day events. So, this company has this product, or this company has done whatever it is, not so much in terms of in-depth, really looking at something in detail, quite long form pieces and research and stuff like that. And that's sort of one of, I think, the quirks of this industry, which is it's gigantic. I mean, it's like a multi-billion dollar, pound, whatever currency you want to use industry. But actually the level of really detailed information about it is quite limited. And I think partly that's a reflection of the fact that a lot of companies are private, so it can be difficult to get information about them. But I think also it's just that sort of, at least in the past, I think this is changing, and you were an example of this, is there was a kind of a hesitancy to be transparent about who you are, what you do, all that sort of stuff. So that was I suppose the real initial cause was I was actually investing in some of the listed companies in this industry, because if you look at
brokers on the stock,
yes,
the stock market.
And
I've been doing this as well for like a couple of years. Like it's somewhat like you invest into competitors, but some of the like if you take XTB, and by the way, I'm a very avid reader of TradeInformer. So you had an article a few weeks ago that how did XTB became so big. So I looked at XTB like 4 or 5 years ago. The total market cap of XTB was like 100 million, and yes, today is 1.5 billion, if I'm right.
Yeah, it's crazy. Yeah, but I think and I would say another evolution of this, though, and this is kind of, I think, part of what we'll end up talking about, is I think the another way that this industry is growing is through companies like the Trading Pit, which have this prop service. And I think one of the things I've noticed about this, which is, I think, quite interesting, is that I think for the average retail trader that's coming to a company, actually it could be for a broker, but also to a prop as well. They don't necessarily think a lot of the time about the background of the industry they're actually approaching, right? And what I mean by that is, if you were going to, let's say, the Trading Pit, and you were going to open an account with them, it's almost like being connected with investors, right? And so if I think about the job that I have, my day job, it's actually in some ways more related to this, where I can see what are investors looking for in a given fund. And that could be something that's more vanilla. So, you know, just a long only equities fund that invests in, let's say, global equities. But it could also be something much more complicated where, you know, it's using derivatives, it's multi-strategy. So if you look at something like in the UK, you have this one fund called BH Macro, which is basically a feeder fund for a Brevin Howard hedge fund. And I think what can get lost, I think, is the sort of connection between that world and the retail world and what people in the institutional world are doing and what investors in those funds are looking for can somehow get lost in the retail space, if that makes sense. So I think that is an area that I'm finding more and more interesting as well because of companies like yours, which are growing so much.
You know, it's interesting that if I look at this financial news space and especially like the retail space, you know, you mentioned that you were originally at this Finance Magnates. There are like some other providers as well. So I want to ask from you, like, how do you stand out like with TradeInformer, like because there are like so many news sources, and what's your like specialty?
Yeah, it's a good question. I would say the main thing is my own answer, but okay. Yeah, I would say the main thing is really what I mentioned before, which is that I think there's still a lot of sites that are very good at covering day-to-day news, but what I thought was lacking was more sort of in-depth analysis of what's going on. And I think you have definitely thus far, if you wanted to see day-to-day, okay, company X is adding this product or this person has moved from this company to this company, you probably wouldn't come to my website. But if you wanted something that was more looking in detail at how, okay, I want to expand my company into this region, or I can see this company is doing really well, like you mentioned with XTV, how are they doing it? I think that's more why someone would read TradeInformer. And so I think that's probably the main selling point. I hope that's the main selling point, is that it's sort of a bit more in depth rather than just day-to-day news, which is also important. But I think, you know, both things are important, and I think that was what was lacking, and I think that's what I provide, which perhaps others don't.
I think that actually took my answer. I wanted to ask my question is that oftentimes, you know, this the retail industry, these news channels, and I won't name their names. We all know who they are. You know? It's just like short news announcement that, you know, hey, something happened in this company. Some guy moved from this company to another. But what I really like about your articles that you go in depth, and today I was actually sharing with the CCO of Tickmill. I was sharing the article that you wrote that actually was growing 5 times from 2017. So we are actually like very actively very active readers of your site.
But glad to hear it. Yeah.
And but I do want to ask, like as you said yourself as well, that if I take like the retail brokers industry, there are probably I think 3,000 to 5,000 brokers out there, and as you rightly said, that majority of these brokers. You actually don't have any kind of news flow, or you don't even understand who are behind these companies and who is managing these companies. So how do you port this information to provide your research and analysis on the industry? Do you have in this Wall Street movie against what openly Charlie Sheen, with a motorcycle and this, black glasses was following, do you follow somebody? You have somebody following like the CEO of XYZ broker, like going to the elevator, and it's not to do it, because to me it seems like very difficult. There are very few firms who are actually transparent.
Yeah, it is difficult. I think I'd be sharing my secret sauce if I gave away too much information. To be honest, what I would say without revealing too much is actually a lot of it is just very random. So I think maybe I'd put it in a different way. If let's say you're going to the trading pit and you're trying to build a good trading strategy, and in order to prepare for that strategy, let's say you read a lot of material, and you watch a lot of videos preparing, thinking about how you can get ready, right? And you might go into that assuming that there's going to be a particular outcome and you're going to have a particular result. But actually along the way of doing that reading or research, you find something that just kind of completely random that you didn't expect. And so I would, if I using that analogy, what I find a lot of the time is, I won't necessarily go into something expecting to find it, but when you can read a particular report, or you do just research, you see what's going on, things end up cropping up that you didn't necessarily expect. And then you kind of go, oh, that looks interesting, I'll look more into it, right? So if I think about the XTB one is maybe actually a good example, where I literally was in Warsaw, walking around on a weekend on holiday, and I'm not making this up. I looked up as I was walking around, because there's a huge skyscraper in the center of Warsaw. I look up and I see that it's like, oh wow, XTB logo. And then when I later, I think that day or the next day, I was thinking, I actually don't know that much about XTB. I'll look up their accounts, right? Because they're publicly traded. And as a consequence of doing that, then a story kind of came out of it. But it was completely, out of nothing almost.
Yeah, I think they actually stand out there quite public, and it's interesting that throughout my years as well, I've been able to meet a lot of other business owners as well, and so the founder of XTB, Jakub, he's actually a very modest, nice, open, transparent guy, which actually you don't see. You see it just the open. Yeah, so you cover the industry a lot, and with all the hurdles and restrictions and regulations we have, that have hit this industry. Where do you see, where this retail brokerage industry, where is it actually headed? So what's the future for the next 5, maybe even 10 years? What do you see? With
10 years.
You have all the insights, you have all the secrets.
It's a good question. I think if you look at Europe, it's becoming a more and more difficult market to operate in. And I think one consequence of that is you're seeing more people going to the prop industry, for better or worse, because it's a bit less burdensome from a regulatory point of view. Having said that, I think already if you look in Europe on the prop side, there's basically a very small number of companies that seem to be legitimate. They're actually doing things, I would say, in a kind of proper way, and who will probably take most market share. But to go back to the retail, the broker space, I think what you'll probably see more of is in more highly regulated markets, you'll probably see a smaller number of players who have a broader product suite as well. And so I think if you look at, Tickmill is one example where, if you're in the UK, you can do options, you can do CFDs. I think you said you're going to do shares, and so you'll have that all in one place that you can go to. And that seems to sort of be the future in the European market. Having said that, I think one of the things about this industry is that if you have good financial backing and you're smart and you have there's always room for a new strategy. And because if you're offering a CFD, the sort of ability to make money quite quickly means that you can come in, and if you're smart and you do have a good strategy, you can actually end up making money very, very quickly and then end up taking market share. And so I don't think it will be the case that, there'll be no competition or anything like that. I think it will be a less crowded market in Europe, but I also wouldn't be surprised if you had some new player coming to market, but with a lot of money behind them. And I think the other trend that you see is really growth in emerging markets, which is a really broad term, obviously, because it includes lots of Asia, Latin America, Africa. And I think the interesting thing there, right, is why that has happened. And I think if you look at the last 10 years in, say, Asia, Africa, even and Latin America, the level of smartphone penetration has gone from, like 10% or 20% to almost, in some places, above basically 100%. Like in Vietnam, there's more smartphones than people. And so it's kind of a sea change. And I think technology's played a role there as well, where it's now much easier to make payments and process payments in those places. So, if you think someone 10 years ago, 15 years ago in, let's say, I don't know, Nigeria or Vietnam or somewhere in South America, they might not have had a PC at home or a laptop at home because it's quite expensive. But now they probably do have a smartphone, and they probably can make payments with that. And so that's quite a big change. And those are sort of more interesting untapped markets as well. And in many cases, they're becoming much wealthier, right? So if you look at, say, India, Vietnam is another one. These are sort of economic growth stories. I think the interesting one the interesting regions are more like Latin America and Africa, because a lot of the time they have huge population growth, but they don't have the sort of commensurate increase in GDP, or they don't create enough jobs necessarily. There's a bit more meta to script discussion, but I think those areas brokers seem to be going after those regions a lot. Don't know how successful they will be, purely because of that problem, right? If you go to Vietnam and you have whatever 6 to 10% GDP growth each year, it's quite an attractive place to do business. If you're in somewhere in LATAM where GDP is kind of flat or not growing or even shrinking, that's what happened in South Africa as well. It's a bit more up in the air as to how attractive it is, but I think that's those are the sort of two big trends I see.
I agree with you that it's like this grasshopper that they go from one field to another. With all this regulations and stuff in Europe, a lot of the people were going to Asia, and because we, like on a particular side, for example, we've been in Asia for many years, and then we saw it. A lot of these European focused brokers, are suddenly focusing on Asia. And the interesting thing is that they're what I've seen also, sometimes you depart with some people, and people that I have worked with, some of them after working in the industry for a few years, they think that okay, they have all the knowledge and experience, and now it's like a good time to start a broker, and it's increasingly difficult actually, unless you go really outdoor and don't really care about compliance and all of these big matters. That risk is not important, and longevity of the brand is not important. But I think you're right that we're gonna see a lot of consolidation in this space, and probably bigger ones will get bigger, and the market 80% will just be divided eventually with 20, 30 global brokers. And mostly we already see and we know who they are.
Yeah, but I think having said that, I think the prop space is a very interesting one as well. Which if you look at the demographics, is quite different to the broker space, and so I wonder how that will play out in the years ahead. Because I think that I think the average age of someone who uses a prop is in their 20s, and if it was broker space, it's 10 years older. Mm-hmm. And so I wonder, it'll be interesting to see where that goes. Like I said, I think a lot of people who are starting in the prop space are, to be honest, don't really know what they're doing. And so they are basically just guys who've seen this thing and gone, oh, okay, I can make money from it easily. And then you see this week, I think it was True Forex Fund, I think, just completely disappeared. Yeah. No explanation, no nothing, right? And so I think you'll probably see more of that as well. So I think if you're considering using one of these companies, just think very carefully about who runs it, what their experience is, things like that.
I guess it's our opinion, what Forex and this CFD brokers business was 15 years ago, when I know, for example, in Estonia, so it's a small market. In Estonia, we had probably 7-8 local FX CFD brokers, like in 2012, when, and we started a bit before that. And then right now in Estonia, there is only one. And probably that's going to happen with the brokers also. There's going to be like a big, this boom. There's going to be this like nuclear winter. And then a lot of these guys will go out of the business. I hope, of course, that there will be a lot of like clients work with it. And then eventually, some regulated larger firms will pick up the thing. But David, I wanted to ask one thing. So you work also in this fund industry, and I just read your this profile as well, that you actually introduce capital to funds, and I just wanted to ask your opinion. So a lot of the traders and also like good traders who don't even have that fund structure, they might be really good at what they are doing, but they are struggling in raising funds. So what's your advice to a talented trader who has like a multi-year history, has like proper risk management? Like what should they do? Of course, there is this prop industry now, and the trading bit we are also involved at, but how do you see also maybe even more from the institutional space, what should they do, because capital is limited. There are hundreds of thousands of traders out there. So how to become successful in raising funds today?
Yeah, that's a good question. I think I sort of touched on this earlier, and I think that one of the things, when you talk about trading, right, it's actually quite a vague term, and you can sort of lose sight of what we're really talking about. And so if you say someone is a trader, first of all, does that actually mean they're taking a view on the market and would be in a position to run something like a hedge fund? And the answer in a lot of cases is probably no. So if you look at, say, XTX Markets, right? XTX Markets is an incredible company, but someone who is a trader at XTX Markets is not really taking a view on where they think the market is going. They're just a market maker. So they're just trying to capture spread, or they're trying to arbitrage in some way. And that's not to put them down, right? It's just a very different dynamic to someone who is actually running a fund and who is trading in some kind of more hedge fund style strategy. So I think that's one part, is to really think about what you're doing. And I think if you think about that within the context of hedge funds, which is really what a trader would be a part of, you have so many strategies. So you could do a long short equity fund, right? It would be considered a kind of hedge fund. But I would imagine that most people who come to, say, a company like Trading Pit are not really going to be doing something like that. What they are really going to be doing is something like managed futures, CTA or macro. So those I would say it fits within those two categories or sectors within the hedge fund sector. And so you then have to go, okay, given I'm running this strategy, which is, let's say, managed future strategy, or is a macro strategy, how does that fit with the goals of, let's say, I don't know, a pension fund, or someone who is a wealth manager, or someone who's just, let's say, a high net worth individual? And most of the time they'll have hedge fund exposure like that as a kind of diversification benefit. So if they are investing in equities, they might have some exposure to, say, managed futures. So they go, okay, if equity part of my portfolio is going to perform badly, at least then I can have some defensive benefit from this managed futures strategy, which is more like absolute returns based. And so I suppose the reason I'm saying this is, a lot of the time I think people can get lost in terminology or not really thinking about how this stuff actually works. And so if you are someone who's saying you're a trader, it's like, well, if you're a trader working in a hedge fund, that is within a much wider sort of ecosystem of the fund management industry, where there's people who will want to invest in specific strategies, and their reasons for doing so will also be kind of specific. So I think it's about understanding what that means in practice, and kind of understanding what those people want is one thing. And I think the other part of it is, it's a bit different, but it's really around sort of risk management. So like, I think when you say, if you look at a trading pit, right? When you go to trade the trading pit, you're paying to take a challenge. But where I think I understand why you use that phrase from a, let's say, marketing point of view, but from an actual practical point of view, what does that attempt to capture? And it is basically, I would say, something like the Sharpe ratio, right? Which is like the goal of the challenge is to essentially go, okay, I can make money trading, but also within certain parameters, which is what, if I was getting money from an institutional investor, they would be looking for. Because if you are working for a hedge fund and you are blowing out of the water, but you're also taking insane amounts of risk to do that, they're not going to accept you because you're just taking so much risk. It's not within the parameters that they want. And like the company I work at, right, has a fund manager, and he runs a long short fund, or definitely used to run a long short fund. And in doing that, he had certain parameters that he had to stick to. So he couldn't just leverage up massively when he was trading futures and just attempt to smash out of the water, because that's not what the people who are investing with him want to see or want to have in their portfolio, because it's just too much risk for them. So I think those are the if I had to sum that up, because it's quite a long answer, I think the main things people should think about is, try and see beyond the vague term trader and actually think about, okay, if someone is a trader at a company, it is part of this wider asset management or fund management industry. Why is that person doing what they're doing? And how does what they're doing fit with the goals of someone that might invest in them? And the second part is really around risk and thinking about, it's not really a challenge. It's more like, how am I managing risk in a way that would be, suitable to the needs of the people that might invest in me, if that makes sense?
Makes a lot of sense. Now, when I think like for an ordinary trader, probably like, even though like he might be like really good, it's probably like from an ordinary investor, it's quite difficult to capture our money, because like if I look at like family offices, or they have certain expectations from the counterparty before they can even invest.
Yeah.
And the lowly trader, say somewhere in Manchester today, or in Madrid or Berlin, it's like he has literally no opportunity to actually convince the interiors that say, not like some super large fund or asset allocator, but even like the medium smaller side investor fund to invest into him.
Yeah.
They have certain expectations.
Well, I mean, one thing I would say at the moment is that it's been a pretty tough couple of years in general for the fund management industry. Having said that, managed futures seems to be kind of making a comeback. Managed futures was a very popular strategy in the 70s, because you had all this high inflation and it was very similar to today, with gold going up crazy, silver was going up a crazy amount. But yeah, I think in terms of actually accessing those people, you're right, it is very difficult to do. And I think, well, in some ways that's why a company like yours exists, right? To help facilitate that process.
Yeah, we're like this filtering process that, what I see often in the trading as well is that, a lot of people probably shouldn't be even in trading. And we're able to filter them out quite fast. And they have no, I would say, proper risk management, understanding of actually the market dynamics or the logic, like how they work, and they are just like trying to like make a lot of money fast, but it's not possible. I always say that trading is one of the most difficult jobs anybody can have.
But I think that's 100% true, right? I mean, if you think about just running a standard equities fund long only, and you were investing in, let's say, UK stocks or global stocks, just outperforming the if you're investing in, let's say, the global stocks, just outperforming the MSCI world is very difficult, right? And that's basically just buying and holding for like 3 to 5 years, probably. So if you were running a much, I would say, probably more complicated strategy where, you might be trading multiple times per day, that is very, very hard. Having said that, again, I think there's that is another area where I think there's a sort of lack of understanding in terms of what it really means to be doing something like that at a hedge fund. So if you are, I'll give you an example. I have a friend who works at a very big hedge fund as a rates trader, and I think the impression that you can get from looking at marketing material of some companies is that someone who is in that position is just like pressing buy sell all day, and they're doing random stuff, punting on them, basically just almost like gambling, where it's much more about like, okay, how can I find a particular edge? How can I often use leverage to take advantage of it, but at the same time minimize the risk that if I'm wrong, then the downside is not going to be very much. So it's not just like, okay, I'm opening an account, buy, and then hoping that it works out. There's a lot more thought that goes into it than that. But and another thing I think we spoke about when you were on my podcast was size, and I think in this specifically for CFDs and actually even futures, there's a lot of size constraints on the sorts of strategies that people would be running, and so that's another thing again where you have to be aware of it. And I've actually spoken to people who manage copy portfolios as a particular broker who have spoken about this being a problem, right? Where they might have 100 million in assets, kind of copying them, and then they're so used to being a small size, and when they click buy, and then you have $100 million or whatever going after you, then suddenly it does the thing that was working for you when you had 5 million no longer works for you when you have 100 million. And so, as opposed to go back to your original question, right? That's another thing that I think people don't really think about, which is if you are running a fund, is it even a scalable fund? Because if you're in the fund management space and you're running, let's say, $100 million or pounds, in the grand scheme of things, it's actually not that much money, right? It's like not a gigantic fund. It's it would be considered quite a small one. But if your strategy doesn't work beyond that, it's like, well, how much can you? How beneficial is that going to be for someone that actually wants to invest in you? And it kind of limits who can invest in you as well, because if their minimum ticket size as an investor is, say, 10 million or whatever the case might be, and you can only do 100 million, then it's how viable is that? So it's a question. You probably have a better insight into that than I do, but I'm interested.
I want to ask you, because we have only a few minutes left because our session will end. And are there any common myths or misconceptions about retail trading that you'd like to debunk? Is there for example, can somebody become rich quick in trading, or what's the reality?
Oh, and myth. So a good question. I think, to answer your question, I would say no. I mean, I think the thing to think about there, right, is you might get very lucky and then you make a lot of money in one trade. I think that would be probably more likely to happen with something like options or futures than it would be with CFD. But I would say the way to think about it, right, is if you look at whoever the most successful fund manager is over a 10, 20-year period, if they were doing 20% per year return, that would be unbelievably good. That would be very, that would be unbelievably good. And so if you're doing 20% per year, does that mean you're getting rich instantly within a few months? No, you would be making very good money. People would be giving you a lot of money if you were able to do that. But if you were just starting out from a small base as a retail investor or retail trader, then you wouldn't, even if you were doing that 20% per year, then probably at least there's no way you're getting rich quickly off of that, right?
I agree. As a last thought, maybe David, before we conclude, like, what are your plans with TradeInformer? Like, maybe you can give us some insight. Like, what are the next intriguing articles that I can alert also my colleagues, or what's in
the pipeline?
TradeInformer in general going forward.
We do have, we've got some plans on the horizon, which I hope to reveal in good time. But I think for now, we're looking. I think an area I need to look at more actually is probably the marketing side of the business, because I think marketing is a lot of the way that people differentiate between the way companies differentiate between themselves. So that's something, and I think also you look at the last five years or so, and it's there's that really cliched Mark Twain expression that you go broke slowly then suddenly. And I feel like if you look at the last 5 years, it's like the media industry kind of changed slowly, and now suddenly it feels completely different, right? We're doing this is something that I think 5-10 years ago would not have happened. And I think it's also like the prop industry as well, right? You look at how people interact with that; it's very different from in the past. Like Discord. How many people were using Discord 10 years ago? It's like pretty much. I mean, maybe for gaming, but definitely not for this industry. So that's a kind of roundabout way of not answering your question.
Yeah. I'll be clicking the refresh button on TradeInformer website on a daily basis to see stuff. But David, I really wanted to thank you for making yourself available for our audience, and I hope I'm quite sure actually that the viewers will like our discussion and getting your insight on the retail market and in general the funds and trading and capital raising. So really thank you, and hope to see you again sometime soon.
Definitely, yeah. Thanks very much for having me. It's been great.